Hi, everyone. Welcome to yet another episode of Disruption Talks over here at Netguru's LinkedIn page. A quick question. What can you do with $1.6 trillion? You could hire LeBron James for around next 80 years or so. You could pay the annual salary for 30 million teachers, or you could solve the student debt crisis that is covering America. Student loan debt has topped $1.6 trillion in the recent years, making it the largest type of consumer debt, larger than credit card debt. The average student loan borrower graduates with, on average, $30,000 in debt, and 1 in 4 of those don't make their payments, don't manage to do that. And actually, the student debt, instead of empowering them, cripples them and their career. So joining us today is Deirdre Clute from Rightfoot, which is the Stripe for student debt repayment. And we will hear from Deirdre how exactly can we change 1 in 4 people not making their payments to 0 in 4, right? So please introduce yourself and the idea of Rightfoot.
Thank you so much, Philip. And yeah, that's exactly what we're driven to do, is to even the playing field and help people get out of student debt faster. So by way of quick background, I am Deirdre, and I am the co-founder and COO of Rightfoot. I co-founded it with 2 other members, Danielle Pensack and Will Schmidt, and the 3 of us are driven to solve this $1.4 trillion problem. So we just graduated from GSB, from Stanford Graduate School of Business, about 2 years ago. And while we were there, personally, I took out a lot of debt. So this is a personal problem beyond just a huge problem in the US. And while we were at school, we realized that this is a bigger and bigger problem in the US, and the cost of tuition is rising dramatically. So it's not going away anytime soon. The debt crisis is actually growing at $33 billion a quarter just in student debt alone. And while we were at school, we said, all right, how can we help people get out of debt faster? And we originally started on this model that was actually closer to helping employers pay off their employees' student debt. And it's something we maybe will speak on later regarding recent legislation that makes that now tax-free. But while we were doing that, we kept hitting this repayment wall. And we realized that even if you want to pay down someone else's student debt, that you don't have the ability to. And so we went through and we started talking to a bunch of our competitors, other players in the student debt space. We said, hey, how are you paying down, making these payments today? And we found it's largely checks. People are literally sending paper checks to pay off student debt, or they're busy trying to integrate with loan servicers that were built on COBOL in the 70s, and it's a nightmare of a process. And we realized that there was a big problem to be had. While there's plenty of ways to make payments towards someone's bank account through ACH rails or to maybe pay down your water bill, there's not an easy way to pay off someone's student debt. And so we are the student debt payment rails. Any type of product that wants to make a payment towards student debt, we enable that. Maybe it might be helpful to give 1 or 2 examples to make this more concrete. And we work with customers that, for instance, maybe they help their customers be able to manage their student debt. So they come on and they say, all right, we'd like to get into a new federal student debt repayment program. But then they want to actually allow their users to be able to make payments from their website as well. And before Rightfoot, they would just be able to offer advice. But now the prevalence of this data has become more and more ubiquitous through players such as Plaid, Finicity, Yodlee in the US that are giving customers access to data. They then say, okay, well, we now want to make this data actionable. So instead of just giving our customers advice, we'd also love to be able to help them make payments towards their student debt. So we embed into people's products directly, exactly like you said, just like Stripe. We're on the back end so that our customers can maintain their full user experience and interactions, but then we facilitate that payment through our payment rails to enable any user to be able to pay off student debt.
So I have to ask, because I know for a fact, myself having studied and also having been one of the indebted students, however, from the United Kingdom, I know for a fact that if you are employed in the UK, there is a system that actually allows for the employer to automatically take off a part of your check and issue it directly to the student loans company. My question is, what kind of technological roadblock are we facing in the US other than legacy systems that basically allows you to exist. Rightfoot is validated by the fact of the existence of that technological concern. So where does that come from? Because only being able to do checks in 2020 sounds kind of archaic, right?
It's crazy. And in our mind, that was why originally we thought there must be a solution for this. So we went out and we started talking to, again, all of our competitors, experts in the space, saying there must be another solution. There's no way that this is what actually exists. And what we found time and time again is this is just a space that's been largely without disruption. It's been undisrupted, and it is lacking the technology that is serving the rest of the financial community right now. And with the rise of fintechs in the US and the ability, users are really looking for not just to go to their loan servicer and to make a payment there. They want to be making payments on the apps that they're already using today, from their banking app, from their neobank, there's all these different ways that we can now get financial support. And we want to be able to make payments towards our student debt there, not having to go through these old systems. So today we've just found that these are systems that have been around for a long time. 92% of loans in the US are federally held, which means the majority of loans are held by government, and government systems are often old systems that are really hard to integrate with. And in order for us to provide our solution, we had to go one by one and be able to integrate directly with loan servicers, again, that were built on COBOL. And each loan servicer has their own system. We have to send them this data manifest in a custom format. It is a nightmare of an integration process. And largely, we think that is what kept people from entering into this space. It's a nightmare to deal with. But we're really passionate about the problem, and we see ourselves not just in student debt. That's where we're starting because we're passionate about the problem. There's also huge inequities in student debt across gender and race. But we see ourselves expanding into all types of debt. So credit card debt, auto loan debt, mortgages, et cetera, helping US consumers get out of debt faster.
Okay. And if I may, just when you say US consumers get out of debt, is that a hint that it's not just student debt that Rightfoot will be focusing on, but perhaps other avenues as well?
Yeah, so we'll be launching with our second debt vertical in Q1 or Q2 of next year. And this is, again, helping not just student debt, but recognizing that credit card debt, personal loans, auto loans are also huge burdens, on US consumers. And so we want to be able to help people holistically so that then when we're talking to our customers who say, yes, I'm helping my users with student debt, but I also want to help them with these other big debt burdens, they can enable that. And then we're also able to help give back the kind of intelligence layer of telling a consumer, all right, you're paying that $10 towards your student debt, but actually your credit card debt has a 5% higher interest rate. How about we move that $10 over to your credit card debt and help you pay down your debt even faster because we're doing it in a smart way?
Absolutely. Looking forward. And if I may, because we usually don't do this, we try to keep all things tech and no politics. But here, given this year, I think there's leniency for me to ask this question.
I think so.
Newly appointed administration of Joe Biden, he's being urged to consider debt amnesty in the form of executive action, meaning that anybody who has student loan debt, they would get $50,000 of cancellation if my research is correct. I'm pretty sure you know better. So I'm curious, what do you think of that in terms of what that could mean for Rightfoot? But also, given that you're an expert in the industry space, what's your take when you hear something like that?
Yeah, so where we're coming from is we're really on a mission to help people get out of debt. If the government is able to do that faster by forgiving it, then that is right on our mission. And again, we're still focusing, there's $14 trillion worth of debt in the US. So taking off 1.6, of course, would be incredible, but there's still such a huge issue in multiple other verticals, as well as I mentioned earlier, student debt's growing $33 billion a quarter. We're going to be right back in the same situation that we are in just a few years. That being said, we find it highly unlikely that it will happen, sadly. And again, I have a lot of personal interest in getting debt forgiven as well. But I think what's more likely to happen is things such as there was legislation that was passed during the CARES Act that makes it tax-free for employers to make contribution to their employees' student debt. That's temporary through end of 2020, but we've been talking to a lot of experts on the Hill who expect that to become permanent, so that it's not, maybe we can get some level of forgiveness. I'm doubtful it'll be 50K. I'm most likely it'd be something around 10K, which is what Joe Biden has been saying consistently from the start, which would still leave $1 trillion of student debt on the table, but would help a lot of those borrowers who are close to defaulting or in default. But with new legislation such as employer contributions, what you're saying is, all right, we're going to bring more people to the table to help out. So maybe we're going to do what we can on the government side of forgiveness, but also enable other players to come to the table. And that's right in line with our mission as well, of helping anyone be able to pay down student debt and be able to make it easier through a number of different apps and businesses that are trying to help their users get out of debt.
And speaking of those changes and how everything's changed over this year, a couple of weeks back, we had another guest who actually runs not an edtech company, but he's very deeply in this space. And we also had a conversation regarding the future of education. So what I would like to hear from you now is that given all the technological advancements and how we are moving away from this sort of legacy approach of we need you to have a degree from this and that university instead of right now micro specializations or the phenomenon of something called Lambda School, I'm sure you know of. So the idea that you repay from what you start earning given their education that they grant you. So given the accelerant nature of COVID, people's expectations towards higher ed institutions also increase, I'm pretty sure, because they start noticing that there are many things that they can do at home, and that right now paying $80,000 a year for the most expensive streaming service of their lectures just might not exactly be the greatest deal on the table, right? So what do you think? Will we go away from higher education institutions as we know? Will they transform? Will something new rise up?
Some small questions for this Monday morning. We are clearly at an inflection point on our education system. And I could see this going a lot of different ways. I mean, on one hand, you speak to the movement towards online. I think there will be a lot of ways in which schools find that they can provide online materials to lessen the cost of college. Because as you're saying, on average, private schools are $48,000 a year and public schools are $21,000 a year. And these are students that are coming in. Majority of students have little or no college savings when they're starting out their college career, which means then if you're taking anywhere from 2 to 4 years of college, you're amassing tremendous amounts of debt and you don't have other options. There's not another way to pay off student debt if you run out of financial aid or aren't eligible. So something needs to change. The problem with online courses is what we've been seeing is a lot of inequity around who's able to access those courses. So typically you're looking at families who maybe they have only one computer for a family of 5, or maybe they don't have strong access to Wi-Fi, or maybe a student doesn't feel comfortable being online during that class in their home environment. And so what you're seeing is a lot of these students who are already in a better position have access to parents who can help out at home to be online. But then the students who are from low-income families and communities, which in the US, we typically see a lot of the communities that have been left behind in this pandemic, both in education and with COVID, have been a lot of the African-American, Latinx communities, and that needs to change. Like that, so we need to figure out a way that if we are going to change this education system, if we are going to rely on online means, that we're finding a way to give equal access to all communities. And I don't think we've solved that yet. I'm confident that we will find a way, but I don't think we've solved it yet. So hopefully we'll see some additional innovations and breakthroughs, maybe someone that's on this show next that will come through and tell us exactly how we're going to fix this and make sure that everyone's getting an equal access to education in the US.
Absolutely, definitely not a small question for a Monday morning, but a great answer nevertheless. So I want to talk about your personal experiences this year as a startup founder, because if memory serves well, and excuse me if it doesn't, Rightfoot is less than 2 years old, all things considered.
So our team's been together for 3 years now, but we did move more into this API space more recently. And again, previously we were in helping employers pay off employees' student debt, but then realizing that there was no way to make payments towards student debt is what brought us to this payment rail. So yes, you are correct in that we are a rather young company still.
And last time there was an interaction between Rightfoot and Netguru, that was around a year ago, I think November last year. So Fast forward to now, boy, oh boy, what a change. I want to hear your take on this as a startup founder. Every time we have someone who's not from an enterprise, but rather from a startup, a scale up, basically their own entrepreneurial venture, what we really want to hear is, what was your first reaction when you started seeing the consequences of COVID? As a startup owner, as someone who's just, developing their business, was this a concern to you, or actually did you see this acceleration as something that will be helpful to the development of Rightfoot?
I think everyone had a little bit of panic at first. You're being like, wow, the entire world is shutting down. I have no idea how this is going to impact us. But we've actually been very fortunate in that we've seen a huge rise in our company, tons of momentum since COVID has hit. And this is coming from multiple different ways. So one is the fact that this legislation that I've now mentioned 3 times, but that it's tax-free for employers to pay off employee student debt, that passed at the beginning of legislation. So now, at the beginning of COVID. So now all of a sudden we're seeing this huge drive where there's a number of different benefits companies, payroll companies, even 401k companies that are saying, well, now we can provide this to our customers. And we can, for instance, one of our customers is enabling employers to say, all right, you're already making a contribution towards your employees' retirement account through 401k, but some of your employees can't make contributions to their 401k because they're in student debt. It's one of the biggest reasons people don't save for their future is because they have student debt. So now employers can say, all right, I'm matching 3% of pay, no matter where it goes, whether it's 401k or student debt, both are tax-free. So then we can make this a more, again, equal benefit for all. And so we're seeing a huge demand on that front, on employer benefit companies that want to now offer this and offer this through Rightfoot. But additionally, there's a huge rise in fintechs. So in this moment where there's this crisis in the US, where users are saying, not just users, but actual people are saying, I need financial help. Like, this is a crisis and I need to figure out a way to get back on my feet. And they're looking to new types of apps to look at a more holistic financial wealth for them. And student debt is a huge part of this. And so we've seen a big rise in fintech saying, all right, we recognize that debt is a core part of our users' lives. Let's figure out how to help them get out of debt faster. And we're very grateful for this momentum and know that this is a hard time for a lot of people. So we're hoping that through our technology, we can be helping people that are really struggling during this time.
And I also want to ask predictions for the future. We've spoken about long-term predictions for the future, big question on a Monday morning. But now I'm more curious about what is your take, especially as a recent student. Do you think that, for example, in 2021, we're going to see a huge decrease in applications and people simply wanting to go to higher education? And I'm not talking, standard deviation, some percent here or there. I'm talking a significant drop.
You are seeing that somewhat. I think it's interesting that we're also seeing some rise of people saying, I'm losing, well, I guess more on the grad school. There has been a rise apparently in some applications to grad schools where people are saying, okay, I need to figure out what I'm doing with my life now. While we're in this recession, may as well go back to school. However, in terms of undergrad institutions, these are numbers that I wish I was more familiar with. From my understanding, it has already started to drop because people are realizing, like, I need to help out my family. I need to stay home. I can't be taking out, thousands of dollars of debt during this crisis. And so I do expect that we will see lower and lower. And I believe also they're expecting the number of institutions will actually go out of business in the next 1 to 2 years due to this decrease, a mixture of decrease of donations, but also decrease in applications and actual attendees to the school. And in some ways, maybe this is the reckoning that we need. This is something where if the schools are seeing people aren't willing to pay this high of fees, maybe there are more creative ways to make affordable education. But again, this comes back to the inequity that is so rampant in the US. My worry is that this ends up falling more on lower income families and communities, and it ends up kind of widening that income gap, because then you'll be having the higher income families that are able to pay for school during this hard time, then going to school and then getting jobs after that. So my hope is that this, again, drives more innovation rather than just leaves individuals behind.
And pulling that subject a little bit, a hypothetical. I snap my fingers, COVID is gone. Let's say mid-2021 to make it more realistic. what will be the things that have been made possible for education during this time that even long after COVID is gone will still stay with us? Just like work from home has been considered a perk and a point of fear for many employers, right now they simply realized, okay, when there's a gun to my head, actually work from home works and my employees can be trusted. So in terms of education, what are the things that are going to stay with us that COVID brought?
I think it will be potentially a focus in on the areas of study that have the highest impact on someone's life. And right now, when people are considering going to school still online, they have the ability to say, maybe I'll take less units. And at a lot of schools, if you're taking fewer classes, you actually have to pay less. And that requires you to focus in on what are the things that will really drive success for me in the future. So I think there could potentially be a movement towards more focused study, as you've mentioned, is often common in European countries, where you go in saying, all right, I'm studying for one thing, rather than kind of a more general liberal arts. I did have a liberal arts education, so I am a huge fan of it, but I think that there's time and places for both. And so my hope is that there will be a rise of more things, such as, hey, here's a school, maybe, for instance, like Lambda, saying, all right, we're going to help you find a job afterwards. A part of education is not just educating you, but it's about actually setting you up for success afterwards and guaranteeing that you do get that job and that you get on a career that you want. So I think it will force people to think differently about how they use education and what they're benefiting from education. Whereas I think right now it's more of a given. And maybe we'll get to, I think what would be incredible is if we get to a point in 10 years where we say, all right, there's a whole generation that didn't necessarily have the formal education that we thought was mandatory for success before 2020, and look at the success that they've had. And then we realize that there's more flexible, that you could go to college, you could go to a more specialty school, or maybe there's a way that you still have an incredible amount of success and it doesn't require a college education, which again, I think will just lead to a more flexible society and an ability for people to be successful no matter what route they choose in terms of education.
Hopefully we can do away with the idea of the student degree certificate being merely a signal to the rest of the world and to the employers that I am worthy, I am valid of your concern, right? So hopefully we can do away with that. Just a quick reminder to anybody who's watching, if you have any questions, pop them in the comments, then we can have a go at them and answer them for you. Last time, my guest over here was a young gentleman who developed a travel startup during COVID, and he managed to raise money during COVID for a travel startup, believe it or not. And I think you are one more in this Hall of Fame despite COVID. You also are raising financing, correct? Could you tell us, because I also asked this that time, that was a very controversial industry to be investing in during COVID times. And when it comes to the student sort of industry, education industry, did this year differ in any way if you were raising money in 2019 versus now, essentially?
Yeah, it is definite. We also raised funds in 2019, and it is different. It is very different. I think having completely online experience is a new experience in and of itself, although people are finding, kind of similar to your question on education, that it works, that you can actually create bonds and learn from people and create, an environment of trust online. But yes, we are. So we're actually no longer actively fundraising. We closed our round, which was very exciting. So I think what was interesting for us is because this year has shown how much financial duress there is in the US. And because of that, we actually found that fundraising was a really exciting time. We moved up our fundraising by 6 months. We ended up closing our lead within 2 weeks. It was something where it went much faster. We were massively oversubscribed, much faster than we expected. And we saw that because people are saying, oh, wow, we realize debt is a huge problem. And 2020 has really shown that, and we're going to continue to see that. And again, with this rise of fintechs, you're seeing that there's a new financial structure that's coming about, and we are now going to be able to power that. And similar to companies like Plaid that have really been the infrastructure for helping unlock data, we're doing that same thing for payments. So we partner with Plaid, and Plaid is able to then say, all right, we're gonna showcase all this data around individuals, but now we're gonna figure out a way to not only show that data, but actually pay down all of those payments regarding all of those loans additionally. If that made any sense, I'm not entirely sure that that did. But the point being is this is a time to really action, and a lot of companies are excited about that. So we will be launching more about our round in probably the next month or so, but we are really excited with the partners that we have on board.
And speaking of partners, we actually have an audience question. And just as a means of introduction for anybody who's not familiar with this, there is something called a 401k, which is essentially employer's contribution program. It's something like investing on the behalf of the employee, something that you can dive into earlier, but it doesn't really make sense because it's going to pay you much more if you show some patience and wait for that to materialize. And here we got a question from Kasia. And speaking of partners, a partnership with 401 Go or Geo, if I'm saying that right. Can you tell a little bit more about this cooperation? I'm pretty sure it has a parallel to what I mentioned about the 401k, right?
Exactly. So this is kind of what I was speaking to earlier, asking around. Employers now want to be more flexible with how they're giving benefits to their employees. And one way that they can do that is by saying, all right, we're already making a contribution to your 401k, or maybe we're offering this, but many employees aren't able to actually get that benefit. So in the US, traditionally, people are making contributions to their 401k, and then an employer would say, all right, for every dollar that you put in, maybe I'll match 30 cents on the dollar. And what we're excited about is now being able to tell employees, it's not just if you make a commitment to your retirement fund, but it's actually if you start paying down your student debt. So I can then, there's two ways you can go about this. Either one, an employee makes a dollar payment to their student debt, and then the employer decides to pay 30 cents towards their student debt. Or even there's an exciting new legislation that's been proposed that would enable the employer to say, I see that you sent a dollar to your student debt. I'm actually going to put 30 cents in your 401k account, so that while you're paying down your debt, I'm helping you get ahead for your future. And that's what we're really excited about with partners like 401 Go, because these are the partners that are going to help people really start getting onto a strong financial future. And by helping the people that would have traditionally been left behind be able to start saving for their future while they're still paying down their debt.
All right. All right. I don't see any more questions. And since we're about to hit the sweet spot of 30-minute mark for the live, just one thing, because I'm sure our audience has been very attentive in listening to what Rightfoot is and how Rightfoot works. And I'm hoping that we had some employers watching this either now or afterwards. And I heard down the grapevine, the word on the street is, the rumor is that right now, if you go to Rightfoot, Rightfoot will waive the application fee and the integration fee. I think that's actually one fee. So if you'd like to save yourself a couple $1,000s just before the year end and help out all the employees that you have on board, make sure to go to Rightfoot, sign up, reach out to Deirdre, and I'm pretty sure that she will take good care of you.
That I will. Well, thank you so much, Philip.
I was ready to end prematurely, it seems. We got a question from Jinder. How do you plan for potential future regulations that may impact your business? Another small question for Monday morning, right?
Exactly. Perfect. Thanks for the question, Jinder. So this is something that we're thinking about constantly. And again, this is something where we see that there could be a lot of changes with the new administration. And what we're prepared for is we're prepared to serve users and whatever type of debt that they're holding. Again, we're starting with student debt because we believe in the problem, and it's a personal problem for us, and we see it as an area that's ripe for disruption. And my understanding is, from everyone I've spoken with, while the push is for $50,000 in debt forgiveness, most likely, if there is debt forgiveness, it would be something closer to 10K, in which case you still have $1 trillion worth of student debt left over. So there's still a huge problem to be had. That being said, if there is a miracle, Christmas miracle, and we do get all of the student debt forgiven, we're already well on our way to supporting other debt verticals. So we'll be there to support the payment rails for whichever debt vertical Americans are struggling with most. And we'll continue to monitor in terms of what legislation continues to change and come, and hoping that there's a lot of new legislation that helps people, again, by allowing their employers to pay off student debt, by allowing them to be able to earn contributions to their future investment accounts, their retirement account, while they're paying down their student debt, all these little things that help users get closer to their financial goals.
Ginger, I hope that answers your question. And in the meantime, we're just hitting the 30-minute mark. So, Deirdre, thank you so much for today. Everybody
Thank
else,
you.
you'll be able to view this again on our LinkedIn page. And also, once again, if you have any more questions, either as an employer or just someone who's interested in the space, reach out to Deirdre and Rightfoot. So once again, thank you so much for joining us today.
Thank you.
And see you around.
See you soon. Thank you so much.
Bye-bye.